Welcome to lesson number 3 of the How to Retire Using Options Bots course. We will be covering how to remove trading and market risk. Again, the whole goal in retirement is to have a steady, consistent income. Again, we're going to sacrifice huge returns for consistency. And again, I think everyone should do that across the board. Why? Because your emotions will be a lot lower. You'll be able to just produce income without having a second thought. Is basically the closest thing to passive income that anybody can have in this world is a consistent options bot. And again, in the last lesson, we covered the 3 best bots you can use. And now that you have those bots and you're using those strategies, the question is, what settings, what rules can I put around those bots to implement so that they have extra securities and protections, that they are more consistent and more reliable. So again, I'll be going through this PDF, which is linked below this video. And if we're looking at it, again, there are a lot of things that can affect us in the market. One is a market crash. One is a hard pullback, again, which is similar to a market crash, and volatility risk. Those are the things that affect us as options traders. So how can we limit losses? The easiest way to do this is stop losses, okay? So you can enable stop losses on your trades. Again, the goal is to make sure that the level that you would close a trade out is no more than 1 to 2% of your account, okay? So what I mean by this is, if you have a $100,000 account, 1% of that account is $1,000. That means that if you were to lose on a trade, that trade should lose no more than $1,000. And again, for most of you, that should be good. That should be acceptable, especially based on the strategies that I showed you. You can stay within that level. But this helps how to scale, how many trades I can have on at once, right? If one trade will cost you $500 for the stop loss risk, then you can only have on 2 trades at a time, okay, for that single trade. So that trade can have 2 positions, okay? Or I should say have a size of 2, and you can have multiple positions with size of 2, but make sure that each position has no more than 1% risk. And so again, we use stop losses for that to help us cap losses and preserve our capital. Next, we have a market crash predictor built in. Now, this is as easy as enabling a single button. And guess what? It's enabled on all of mine because it's amazing, okay? So if you go here, settings, if you go here to management rules, and you see this management that's under safeguards, you can see here, enable market crash predictor. You can see it's enabled for me because I love it. It's enabled. This helps me avoid 90% of market crashes. I might be saying, how in the world does that work? Well, let me explain this to you. Back in 2017, I programmed this indicator, which shows us really risky levels in the market. Okay. This indicator has gone on to be used by 20,000 people that actually bought access to this indicator to use it for this very reason. And they've used it to avoid a lot of crashes. The biggest one being the 2020 COVID crash. Okay. So let me explain how this works. When a stock or when the market gets outside of the upper range, there's a very great chance of the market pulling back or crashing. So you can see here, we broke out of it and we stayed above it for multiple days. That's a sign that we're going to have a very strong pullback, a very strong crash. So what we do in this time is we wait. We want to keep capitalizing on this moment. And then once it starts to turn back down, we want to exit all of our positions so that we're not stuck in this market crash pull down, which could cost us a lot of money. And so that's exactly what enabling the market crash warning does for you by default. It monitors these risky levels. If it gets to it, it will automatically take you out of positions and give you a nice 21-day break to allow the market to pull back and reset before you get into the next set of trades. And so just like that, by enabling the market crash warning, you are now able to avoid 90% of crashes. Now, again, that won't always happen, but you can see here that it happened for this pullback in 2018. It helped here as well. It helped here in 2023 before this pullback. It got us out in March before this pullback. It didn't get us out of this one because it never crossed above. And right here, we're getting close to a risky level. But again, it won't take us out until we have crossed the risk threshold. And so that's exactly what that does, all on autopilot when we enable that setting. Okay, cool. So now that we learned how to cap losses, we've learned how to avoid most market crashes, not all of them because nothing's perfect, but most of them, we now have to deal with the risk of volatility. Okay. Options trading has a lot of Greeks, have a lot of weirdness going on. And so volatility plays a huge measure in that. The easiest way to restrict how much volatility affects you is to change your sizing, your position sizing based on where volatility is. As option sellers, if VIX is low, we have a lot of risk. If VIX is high, we actually have less risk. Okay. So if I break this down for you here, there's actually an easy setting because again, my goal is to make this easy for you. So you can see here, enable VIX-based buying power. If you enable this, now depending on where VIX is, it will change my sizing. I see here, my max sizing should be $2,000. And it says, okay, if VIX is very high, we will allow the bot to use the whole 2,000. If VIX is low, we'll only allow it to use 1,000. If VIX is somewhere in between, we'll change the sizing. Just like that, with one click, we can change our position sizing purely based on what the volatility is doing. And this way, we now know that whether volatility is low or high, our account is sized correctly for it. So that when a volatility event happens, our account doesn't have extra risk, extra losses because we weren't accounting for them. And so just like that, a few simple buttons, the stop loss setting, the enable market crash predictor, and enable buying power thing, we're able to eliminate a lot of the risk that comes with options trading to make our trading more consistent and more profitable. All right, that is this lesson. I hope you enjoyed it, and we'll see you in the next lesson.